Well, hello, everyone, and welcome back to the Man and Machine here with the PeakBot team and Mark from Harvested Financial. Fellas, coming off big weekend with the Super Bowl. I know all of us had to cheat on our diets, and we're probably feeling it a little bit today. But how we doing, guys?
I am slow this morning.
Yeah.
We got to move the Super Bowl back to Saturday night. I don't know who we call about that, but it seems a lot more practical.
I'll tell you what the real move is. Next weekend is President's Day weekend.
Oh,
so they just need to extend the season one more week, add another bye week into the season. Players love it, fans love it. And then we get the Super Bowl on President's Day weekend, and Monday's off for everybody.
Can you?
What's more American than that?
Yeah. Can you write something up on that? That's as American as it gets.
That is actually, for the first time in American history yesterday, a sitting president attended the Super Bowl. Donald Trump was at the Super Bowl.
Fun fact.
Yeah.
How many suites away do we think he was to Taylor Swift? How many yards between the two?
Enough.
I guess we got. I mean, look, it's such a huge event. The whole world tunes in. It's crazy not to talk about it a little bit. Obviously, a dominating performance from the Eagles. Eagles winning the Super Bowl, I think, is also pretty American. I mean, look, I get we're all teams are American, but Eagles feel particularly American
because of the Eagle.
Yeah, I mean that helps, right?
Philly's a pretty American city too. I think it's pretty quintessential cross section of America.
Yeah, big things happen there.
Yeah, big city, important city. Look, I got a lot of friends who are from Philly and a lot of very close Eagles, fans in my life. So, good for them, but game really kind of went away. Any parlays, most bets were screwed unless you had Eagles.
I thought Saquon was a lock. Saquon was.
Yeah, sucked. I mean, just a wild game. But anyway, we got a great show for everybody today. Of course, we're going to be doing some stocks in real life. We're going to be learning a little bit with Mark. So a lot of good stuff to do. Ben, we can, if you'd like, quickly take a look at the PeakBot picks from last week, just see how we did, and go from there. What do you think?
Let's do it. I'll get my screen up.
Please do. Let me know when you're ready. So when we checked in on this on Friday, there were a couple really close. I think Thomas was really close on a few. We'll take a look and see. So we'll get started with my picks. These were expiring on 2/7 on Friday. I had 3 bulls. So we'll start with mine. Wells Fargo, WFC. I'm going to get some music going for us in the background just a little bit here. All right. I would need it to be above 77. I don't know if I said that. I did. All right. For a boring. Hey, Doug. Liberty Bell. Yeah. City of Brotherly Love. So good to see you, Doug. All right. I was bullish on Dash. Over 182.5 for $81 in premium.
Wait, sorry. What was your number for Wells Fargo?
77, which we did it. Bullish.
Okay, cool.
Yep. Dash was 182.5. Man, I feel like ever since we talked about this on our show, I feel like DoorDash has been crushing it.
Yeah, it has been. Look at this curve.
Yeah, I mean, verticality there is very nice. Bank of America, my old trusty steed. Bullish, over 44.5.
3 for 3.
3 for 3. Now, my premium was relatively boring. I would assume that I'm going to get beat. I had the lowest collected premium. It was close between Thomas and I. So let's go to Thomas. He was 3 bears, okay? So I had 3 bulls, 3 for 3. Let's see how Thomas does with 3 bears. McDonald's. These are such Thomas picks. McDonald's under 295. Oh, wow. Man, that was one of those that was really close.
Squeak that one out.
Yeah. By the way, Mark, really quick, our 100th episode on Friday, Ben and Thomas were trying to convince me to eat like 100 McNuggets live on air. Or,
individually or collectively.
I'm not sure. Luckily, it didn't get that far.
I was thinking collectively, but Thomas was shooting for individually.
Yeah,
a lot more nuggets than you think.
That's a lot of nuggets, man.
It's a lot of nuggets.
I'm up for any challenge, and I feel like I'm qualified, but I don't know. That kind of scared me. All All right, so Thomas collected $59 premium on that. He was bearish on PG, Procter Gamble, under 170 for $14 in boring premium.
Squeaks that one out as well.
Also, that one was flirting on Friday, so just gets in there. Oh, out. And DG, Dollar General, bearish, under 75 for $42 in premium.
3 for 3 for Thomas.
Boy, that's not a fun chart.
Not if you're Dollar General.
Yeah, not if you're Dollar General. All right, Ben. Here's
Honestly,
the thing.
This looks like a good chart for trend spread.
Sure does.
If you just ride and call spreads all the way down.
Just a little dash there. I've been trading DG in one of my accounts. All right, Tom. I'm sorry. So I went 3 for 3. Thomas went 3 for 3. We're 6 for 6 right now. Ben, you need to go 3 for 3, and if you do, you win because you have the premium covered. So let's see how you did. All right. Ben was 2 bulls and a bear. Oracle, ORCL, over 165 for $63 in premium. Not even close. Nicely done. Bearish.
I took Oracle in my real portfolio as well.
Oh, love that.
There. I took profit on it early, actually.
Love that. Trend spread being good to you. You were bearish on Texas Instruments, TXN.
Yeah,
under 195. 195.
Nice.
For $59 in premium. All right, Ben, you need this one. Bullish on your boy over at Meta. 682.5 you need. 682.5 for $385 in premium. Not even close. Could that even be the right price? Can we look at the 5-day? What happened here?
That is the right price. Would you look at that? I mean, it's just a solid move up.
$40?
Yeah, $40 for a $700 stock is not.
Man,
I mean, that's still
I get it, but still great movement. You collected $385 in premium on that one if you had the stomach for it. Ben, congratulations. You win. Very well done. Let me just pull my screen up here for just a quick stat update, and then we will move things along here. So this is here we go. So team went 9 for 9, by the way. All right, let's not lose sight of that. 100% win rate out of the team here last week on credit spreads from 131 to 27 off of our trend spread watch list. Let's just take a look here at the win rates. Ben, you're coming up on our 80 club here, man. So you take the win. You're now at 8 weekly wins, crushing the weekly leaderboard. And your win rate's sneaking up on us here. So Thomas is at 84.2%. I'm at 80.7%. And Ben, right behind me at 79.2%. So good week for us in a somewhat crazy week on the market.
Big change coming up to PeakBot picks too. Starting this week, I think we are going to actually be trading the tickers we choose.
Yeah.
So that way we are keeping ourselves more accountable. And actually, Mark, that opens the opportunity if you want to enter PeakBot picks with us as well. We'll wipe the leaderboard clean, and you could just throw some names on there, 3 names a week, and we'll see who wins. And we're actually going to make these trades. And the reason we decided to do that is, I mean, look at the numbers on screen. Well, now they're not on screen anymore.
Oh, sorry.
It's going to say, look at those win rates. We're all hovering right around 80%, and we're bagging a couple $100 in premium each week. So we figured, why not just trade these things? Especially a week after this week, 9 for 9 for the team. That's a big win. Yeah. So we will be making our selections offline because we're not going to pressure ourselves with making these selections in just 5 minutes if we're trading our real capital. So we'll be making our selections offline and then reviewing during the show why we chose what we chose.
I love it.
I like that change a lot. I can't wait to see the P&L figures.
And Mark, if you're in, you'll tell us. Don't feel like you need to answer now. But very cool. All right, so good week for PeakBot picks. And by the way, when we come out on Friday and we start picking our real trades, all right, maybe we do wipe the leaderboard clean. I think that's probably fair, regardless. But we got to keep in mind picks from last week. I'm hoping we do okay because we did for our 100th episode. We did it in 100 seconds. Okay, so we normally do it in 5 minutes to give ourselves 3 picks. We did it 3 picks in 100 seconds. So we'll see. But all right, very cool. Let's get into today's stocks in real life.
We're going to do a little bit of stocks in real life. Then we're going to learn, and then we are going to look at the economic calendar and then get on our way here.
Let's do it.
So this week, stocks in real life is Kava. Now, I haven't had more than experiences that I can fit on one hand with Kava. But I do when I was eating at Kava, I did enjoy it. So their slogan, they're saying here is to bring heart, health, and humanity to food. So for those of you not familiar, Kava is like the Mediterranean Chipotle.
It's great.
You go to Kava, you could put together a Mediterranean style bowl for yourself, get some nice hummus in there, get some baklava for desserts, and enjoy either there or take it to go. So guys, have you had any of your own experiences at Kava?
Mark, you first, man.
I've never been to a Kava before. A fan of the Mediterranean trend in terms of like quick lunches, but Kava specifically, no, I've never been to one. I had to look up where the nearest one closest to me was.
There's not many up here yet. So it is delicious. It was founded in 2006 in Rockville, Maryland, which I lived 20 minutes from there for 3 years outside of college, and I became very familiar with Kava. Too familiar. I've given a lot of my lunch money to Kava. But I did feel healthier eating it. It is really fresh. It is delicious. I do get overwhelmed by the menu a little bit. Something like, you can explore there. There are some things that I've never had before. I don't know how to pronounce some things, but it does make it exciting. A lot of colors. Kava's really good. 2006 in Rockville, Maryland, as we said, Mediterranean inspired. I'm just looking at some fun facts here. Kava Group, also known as Zoe's Kitchen, which it acquired in 2018. So they're growing. Any guesses on when they went public? Really quick.
Early 2024.
Ben?
I was going to say like 2021.
Okay.
I feel like they were a COVID IPO.
June 2023. So Mark was pretty close there.
Okay.
So again, these are GPT facts, but I'm getting here, and maybe we should pull up a chart. On the first day of trading, Kava saw a dramatic increase, more than doubling its IPO price. So that we can take a look at. So it's trading at almost 140. Which is close to its all-time high. Its all-time high was back in October of 2020 of last year. It looks like at 145.
Yep.
Sorry.
There are 309 restaurants. Kava restaurants.
That's not as many as I thought.
No, and revenue has been strong. It's been growing over 30% year over year for the past few years. So. The question is this the next Chipotle, right? Let's take a look at the market cap real quick. So the market cap currently is at 15, almost 16 billion, which is quite a bit for 309 restaurants.
Yeah.
So I want to take a look at that. So mark that down. Market cap is 16 billion. I want to take a look at Chipotle, ticker CMG. What is their market cap? So call it 78 billion. So
and then look at the prices.
Yeah, well, that doesn't matter as much, but I
know. So
Chipotle, call it what, 5 times larger than Kava. I think there's going to be some competition here.
So I was just looking up. Chipotle, as of the end of last year, has 10 times the number of restaurants, though. There are 3,700 Chipotles out there. So 5x the market cap, but approximately 10x the total count of restaurants.
Okay. So Kava, arguably, potentially a more efficient business than Chipotle is. But I guess when you expand, like Chipotle has tried to expand, you lose a lot of that efficiency, especially from the business perspective. So
Chipotle is aggressive. They opened 300 new restaurants roughly both in 2023 and in 2024. So they had 2 new Cavas in the last 2 years.
Yeah.
Wow. That's surprising. Where was the closest one to you, by the way?
I believe it's down in like Norwalk, like down closer to the shore, like 30, 40 minutes away.
Okay, got it. Because I can't imagine also, I hate to say this, but like the quality of the food, I would imagine their margins aren't as high as high as Chipotle. But I got to tell you, Mark, have you ever traded the stock?
I have not. No.
Makes sense. I assume that was your answer. If you'd never eaten it or never really, been around it, I'm not sure you were going to trade it. So I will tell you, I'm going to pull it up on the trend spread watch list here, just to see what it's doing in premium. I've seen it on our watch list. I've never traded it myself personally. Ben, have you ever had it sneak into your portfolio?
I've traded it a couple times on trend spread before,
Okay.
but not. It hasn't been a staple by any means.
Yeah, because I'm
But yeah,
curious.
pull it up. I'm curious to see what it's at.
Yeah, and I want to know how wide the spread is too. Let me see if it's
Pretty
on
decent
here.
implied ball. We're hovering in the mid 40s. It's gotten as high as like the 70s and 80s though, during its big run up last year. So there's some premium in this.
So yeah, I'll pull this up. So on our detailed trend spread watch list, now this is data as of Friday. This will update today. Now the expected value here isn't so hot. We want a positive EV here, but bullish moderate. Almost a 75% pop. Nice ROI here. So it looks to be a $7 spread, paying $75 in premium. That's if we were to run it from today till Friday. Okay. So our strikes, sold put is 133, bought put is 126. Ben, you got a chart up that we can kind of just look at that for a second?
Yeah.
So we got good buffer too. We got 4% breathing room. So
What were the strikes?
133 was the sold put at the 30 delta or close to the 30 delta.
Okay.
And then 126 is our bought put there. But it looks like we started to see, maybe some resistance. I think the all-time high was probably right there as well. No, never mind. Back in October, maybe it looked like it spiked. What do we think here?
I mean, for me personally, it's been trending up the past month or so. I'm bullish on trend spread, right? I would just be wary of like there was a pullback here. We had a big green bar here. Maybe that was in response to that. So is the trend going to continue upwards? Not sure, but it does look like there's some consolidation to be had between the $140 and $145 level. And then breaking out above that, it's pretty much, I don't want to say green fields because we've been there before and have gotten rejected and bounced right back down, and pretty violently too. These bounce back down. As long as I'm hedged on it, I don't mind. However, due to the negative EV that we're seeing on the watch list, it's just going to be a ticker that I would stay away from. I wanted to get that positive EV.
Yeah, $7 in terms of spread on that. Like you got to remember, a 45 vol stock is going to expect to move something like $3 a day. So over the course of a week, $2-3 moves, and there goes your $7 spread.
Yep. Yeah, one to keep an eye on. I'm not bringing it into my starting lineup just yet, but I'm happy we looked at this stock. I know that the val cap and everything comparatively, we said 16 billion to Chipotle 78. This is almost double the price of Chipotle, which is interesting. And we talked about some efficiencies here. We're going to see. I mean, that's almost become like the preferred way for people to eat. I feel like this fast cash, build your bowl, build your meal here. We'll see more and more of these. So any last thoughts on Kava here before we move on.
We could do a whole another episode on the bowlification of American food.
How about
I think we should.
Yeah, we could. We really could. One bowl that I haven't dug into yet is the Poke Bowl world. Mark, you Poke Bowl. Oh, I could tell by Mark's reaction there.
I like a good Poke Bowl, but like fad, right? They jumped the shark, and like now you don't see a Poke place anywhere.
Yeah, there's one right next to me, but it is also a sushi place, right? So like I feel like they're doing way more sushi than Poke Bowls, but anyway, yeah, I love the coverage here. Interesting stock. I'm going to keep an eye on it because, as Ben said, like it's not totally clear air over 145, but there's definitely some room for that thing to run by the looks of it if we can break that. So,
yeah, actually, Dillon, do you still have the watch list up by any chance?
Yeah, I do.
I'm just curious if it says when earnings are coming out. So we'll get your earnings.
On here it says March 19th, right here.
Okay, that's probably right.
And then
that was
here. Yeah, it also said February.
Yeah, you were highlighting Chewy on the watch list.
Oh, my bad. Kava. Yeah, 225. That is correct.
Okay, so 2 weeks.
Yeah, keep an eye on it. Set your reminders.
2 weeks. Maybe an earnings play.
All right. Cool. So anything else? If not, let's keep it moving here.
Keep moving. All right. So now we will transition segments here to learning something today. And I think we had a new name for this segment. I can't remember what it was off the top of my head, but it was a good name. But I just can't remember. But anyways, today Mark will be leading the conversation of balancing theta and market risk. Last week, actually, Mark, would you mind giving a quick recap last week of what you and our guest Matt Cashman talked about? Because that was such a good conversation, and I highly recommend anybody watching now to go back and watch that conversation from last week. But Mark, you want to give a quick recap on the conversation you had around Vega and Gamma?
Yeah, definitely. Well, that's actually where I was going to lead into this whole theta conversation, is that like a lot of what we talked about last week with Gamma and Vega was sort of the difference between those Greeks and how those Greeks evolve over time. And so where Vega, or what Vega risk looks like in the near term, spoiler, not that much. Most of the Vega impact in an options price is going to come in the longer dated option. Whereas on the flip side, we talked about how Gamma, how that gets so powerful towards expiration, and sort of the impact of Gamma really diminishes over time. So you have a very long dated option that's not going to have much Gamma to it because there's so much time on the clock still. However, that same amount of time on the clock gives it a lot of Vega power, where a little bit of a vol point change can dramatically change the value of that option. And so remembering that Vega being the Greek which describes an option's sensitivity to changes in vol price, so how much the price of that option, how many dollars and cents that will move relative to a 1 point change in implied volatility. Gamma is actually a second derivative, and so it's the sensitivity of the delta of that option, which would be the first derivative of movement in stock price. So how much the option's price will change as delta changes. And I thought the slides that Matt had with the effects of those over time is really powerful, because it, whether you're executing a short-term strategy, whether you're executing a long-term strategy, you kind of have to know how much stock price is going to impact it, how much vol changes are going to matter for your strategy. So super interesting discussion of those Greeks, I thought.
Yeah, no, it was a really interesting conversation. And I think that not necessarily coinciding with all of PeakBot's strategies right now. However, we are looking into some longer term strategies where, as Matt said last week, Vega might be our primary measure when selecting stocks for a longer term strategy.
Yep. If you have a weekly option on, a change in implied volatility price isn't really going to matter much for you. What really matters is where the movement is happening, on these next, over these next 72 hours.
Mm-hmm. Right. So how does that all tie into balancing theta and your overall risk in the market here?
So we're talking a lot about time, but the actual Greek that refers to an option's changes in value with respect to changes in time is theta. So theta is also colloquially kind of known as the decay, how much that option will lose value or decrease in value for a given unit kind of in passage of time. And so options, because of their optionality, because of their extrinsic value, are going to change in value depending on how much time you have left on the clock. If there's a lot of time for that stock price to move, that option is going to have more value naturally. If there's not that much time on the clock, that option will have increasingly lower and lower and lower amounts of extrinsic value to it. So the sort of change in that premium as time passes is known as the theta. And so for short-term options, we tend to see a very rapid decrease in theta. And we'll get into that a little bit more. But on longer-term options, conversely, we see a much slower rate of decay. So the decay is not linear in an option's lifetime. That the longer, the more number of days there are, that's going to move slower because, you know, proportionally, one little day's change now, there's still, you know, quite a bit of space. Whereas the decay happens very rapidly at the end because so long as there's a little bit of time on the clock, it's kind of like anything can happen. You know, if you're a sports fan, it's that buzzer beater. You know, as long as the bell hasn't rung, an option can sort of wiggle, which is why that premium sort of falls off a cliff at the end of the day. And I actually pulled up a chart. I'll share my screen of what exactly that decay looks like because I think that's.
Yeah, let's see it.
So here, I think I've got it up. So this is just a very simple decay of this sort of exponential, pretty simple image of the exponential decay of that option's price. So, you know, early in the option's life cycle, as each unit of time moves along, you know, the option's value isn't decreasing very much. Then you get towards the end and you see it really fall off this cliff here because just from a pricing perspective, so long as there is space for that to move, you have to attribute some amount of value to the option. So in a lot of ways, theta goes from very theoretical and marginal in the longer term options to, you know, a pretty rapid volatile component to that option at the end of its life. And, you know, if you're targeting short-term strategies, this is what you're looking for. You're looking for that to manage that sort of fall off the cliff time, whether you're long or whether you're short, right? Shorts are trying to sit on their hands and hold it as that, you know, rapidly collapses. Whereas longs are looking to really monetize, you know, every little bit of movement into the end of the option's life cycle. So I think the most important takeaway from theta is understanding how that decay is going to change over time and where on the curve your strategy sits.
Yeah. You know, what's really interesting, Mark, and you and I have been looking at a lot of iron flies recently together. And the value of an iron fly, theta decay, speaking about theta decay specifically, and we're looking at 0DTs, by the way. So the value of an iron fly throughout the day really doesn't start to quickly change until about like 30 minutes before the bell, and then really, really accelerates 15 minutes before the bell. Now that might seem obvious, but it's actually really interesting to see. Like, you can get into a $20 wide iron fly and collect about $10 in premium on it at around noon or 1 o'clock or even 2 o'clock. And the value of that spread, even if price stays exactly where it is, which is the idea of the iron fly, you don't want price to move. Even if price stays where it is, the value at like 3:30 is going to just move from like $10 to like $8. And I don't know, Mark, we saw that a couple of times. So it really goes to show you, like, the closer and closer you get to expiration, the faster and faster this is accelerated. And then I think the same could be said on a longer scale too, right? Like if you're selling a 45 DTE condor, which I know a popular strategy out there is sell these 45 DTE condors or flies and then roll at around 20 DTE or something like that. That's when you really start to see some theta decay for these longer dated plays. So it is really interesting to see how quickly theta can change things, especially on 0 DTE options. I guess, Mark, what's your preference, if you have one, when leveraging, or just when thinking about theta? Are you more of a fan of the 0 DT, let's get these contracts to 0 ASAP, or are you more of a fan of the longer dated DTE and say, hey, I'll take a majority of the theta decay for these longer options over the course of 2 weeks?
I think it really comes down to objectives, but I think you're dead on with the fact that these 0 DTEs are an incredible laboratory to kind of see very quickly over the course of one trading day how quickly that options value would change. So, I definitely encourage anyone that's looking at short-term strategies to just pull up a spread going into the end of the day and really watch. If you have that hour from 3 o'clock to 4 o'clock, I mean, it's better than most stuff they put on TV these days. So like watching that option change and, rapidly decay or rapidly explode in value, right? Like, both things happen. A lot of that's gamma at the end of the day, that movement right into the close. But I think both those strategies, whether you're going short term and trying to manage and capture, with some savvy execution, getting in and out of positions, or on the longer term, if you're trying to capture a little bit more of a steady drip, I tend to find that like strategies in the short term need to be very highly risk managed, where over longer term, because of sort of the way the Greeks evolve a little bit more slowly, your tactics for capturing that are a little bit different. Like you say, you sell something at 45 days and maybe buy it back on 20 because of that, section of the curve. That has its own risks, right? While you're worried about exploding gamma in the short term, you have a lot of delta drift with a long-term strategy. So you might need to introduce some hedging in that dimension. So I think, as I mentioned before, where you are on that theta decay curve is going to dictate how important and how to manage your theta.
Mm-hmm. And again, here's the theta decay curve. Mark, you want to zoom in on that again? And as you can see, the x-axis here is time, and then the options value is on the y-axis. So the closer you get to expiration, which is further to the right, the lower and lower that options value gets. And when we're selling options, again, remember, the objective here is we want value to be 0. We want value to go all the way to 0. And like Mark mentioned, if you wanted to take a look at what theta decay looks like, maybe just pull up SPY, and I'll show you how to do this on Tradier. You can go to the chains tab on Tradier. I just typed in SPY. Make sure you're looking at today's expiration. And then if you wanted to set up an iron fly, you can just go to wherever the money's at the time. You can quickly see that on Tradier's interface, where the gray turns to white and vice versa on the put side. You're just going to want to sell 2 strikes, sell 1 strike, both on the call and the put side, and then go ahead and create, I don't know, you could probably, I think a $3 spread would be pretty good to see on SPY. So just go $3 decrease on this point here at the top. So go $3 decrease from where you're selling the put and $3 increase from where you're selling the call. You're going to buy those options, and that's how you form your fly here. And then if you click send to ticket, you can just put in a quantity of 1 for all of these, and then you get your quote here, you get your price. So we were just referencing SPX, but you could also, of course, do this on SPY. And then you could just watch this value throughout the day, and you don't even have to place the order. You could just have it sitting right here in your order preview, and you'll see this value potentially diminish throughout the day. Now, if price moves outside of your fly, then this price is going to increase, and you could actually lose on the trade. Of course, you could always lose on any trade, but it is interesting to see how quickly the value of this fly will decline over the course of the day.
Well, and for sort of the 201 level thing, if you want to compare SPY to SPX, the way those decay differently is a very, that's not an accident. That's a function of the market structure of how those options settle, right? You see the difference between an American exercise option and a cash settled index option, that SPX is going to settle on what that final closing print is at the end of the day. So when that print happens, there's just settlement, and there's, it'll obviously be cash credited to your account, but there's no question. SPX closes at 6,002, your 6,005 put is going to be worth $3. Boom, no questions asked. Yeah. SPY stops trading at 415, but you can submit exercises until 5:30. So there's an hour and 15 minutes of extra theta wiggle in that value where that option isn't going to decay perfectly to intrinsic value. It's got a little bit of time on the clock. And what's even more bizarre is it's non-tradable time. So like there's not actually options that you can trade during that time. You can trade the underlying, of course, but a SPY butterfly expiring today is going to decay at a much different rate in those last couple minutes than the SPX one because of that settlement quirk. Like there's quite a bit of, I guess, Americanness premium. It's not even theta almost. I mean, it sort of is, but the fact that that like settlement occurs later gives SPY some interesting quirks.
I like that Americanness premium. I definitely prefer SPX myself. I don't want to get a sign.
Oh, getting the cash is great. The 60/40 tax treatment. I mean, there are a lot of good reasons for that.
Yeah. And if you are trading a ton of SPX, you could sign up for Tradier Pro Plus and trade SPX contracts for, what is it, 10 cents? 10 cents per contract for Tradier Pro Plus. It's $35 a month. You get commission-free option trading for equities options, but for index options, the fee is only 10 cents versus other brokers are charging you 65 cents. Even Tradier without this is charging you 35 cents. So with Tradier Pro Plus for just $35 a month, you could trade SPX options for just 10 cents.
Great question, Doug. And an interesting sort of, I guess, market structure item that, yes, the SIBO has vehemently defended their right to be the only person to trade SPX. There have been numerous lawsuits over the years. The ISC has come at them. Everyone else wants to trade SPX, but SIBO has a pretty lock solid patent on SPX options. Same with the VIX options. So if you want to trade SPX and VIX, you've got to go to SIBO. That's probably a lot of their premium value in their equity price is due to the volume of contracts that are benchmarked off that and traded there. So SPY, VXX, any of those proxy products, are multi-listed, but SIBO has a stranglehold on those big indices, which is partly why they can charge for it, what they do. And Tradier's offer is less than the posted prices at SIBO, I believe. That's the benefits of having a monopoly there. A monopoly that's been defended multiple times in court.
Yeah. Awesome. Cool. Well, great segment on theta here. I've always wanted to build a bot and call it the Theta bot, but that just doesn't match our other bot names. But maybe we'll make a change to that.
we could work it in. Look, we'll take any winning strategy.
Yeah, and I think, the decay curve, I think I said was the number one thing to remember about theta. But I think the two thing probably is that like theta isn't free money. That like patience costs and you're collecting premium for exposure. So, just the idea of collecting theta and, the whole theta gang, like that's, options aren't giving free money out there. So the fact that an options price is changing over time is just a function of the risk dynamic changing also. And whether that's a buy or a sell is something you have to evaluate independently. But I definitely wouldn't look at theta as a pure credit play. That it's payment for a risk premium.
Absolutely. Yeah, got to risk it to get the biscuit. Some would say.
Risk it for the biscuit. Yes,
maybe that's the name of the strategy, Ben.
Risk it for the biscuit. Mark, you mentioned Theta Gang there. Are you referencing the popular Twitter or Reddit there?
If I'm allowed to, I am. If not, that's
yeah, no, you are.
Incidental.
Yeah.
But I think that's a pretty common, the attraction that people see. Hey, short-term options have this extra premium. The theta curve goes even faster at the end. Like it's an easy trap to fall into but they're very like practical model-based reasons for why, that theta decays as it does. So it's really about managing that. And like every other risk, you're getting paid for something.
The biscuit risker, which I hate to say it, I love it. I love it more than I thought. What's that?
the TBR bot.
TBR. Oh man, that's a good one. Doug, always on it. Excellent. Great segment. I was soaking it all in. Watching you guys, watching Mark talk about options is always fun. Awesome.
Yes.
So what do we got next, fellas? Just a little economic events and
economic events like usual. We'll just go through the calendar here. We can talk about how we feel about these events. We've got some, and then we'll talk about MaxBot a little bit. I think there's some people in here that want to talk about MaxBot. So we'll mention all of that. So coming up this week, not much going on today. We've got consumer inflation expectations, which the Michigan sentiment report that came out, it was a preliminary report that came out on Friday, dropped the market by like $40 in a matter of a couple seconds. So that was twice. So some major bar movement, some major price action caused some slippage with the MaxBot, which we'll talk about in just a second.
Just that was real quick there, like that is not a report that I typically think of as market moving, right? And
No.
like that's one of those things that you've always got to, keep your eye out, because like it changes where the cheese is changes, and like the impact of any given thing. I would never have said Michigan's going to blow up the market.
No, let me tell you, there's scar tissue there now built up. Believe me, it's added to the list. To your point, Mark, if it's listed and it's scheduled, regardless of maybe the general impact it has had, you're right. And watch,
something can always slip in. Yeah, there's a reason it's news, right? It's wild.
I feel like we're going to feel this way about a lot of these, call it minor events, through the startup of this new political administration. Like, I think that things are changing, and what we typically saw as like a standard report that would come out might not be so standard anymore, just given political agendas and how things are changing. I am I don't know how confident I can say I am, but I do believe that things will return back to the steady-ish state that we saw previously once Trump is kind of completely settled in, and is kind of, the market's used to seeing his face every day on TV and listening to everything he says. So maybe I'm overly optimistic, but the guy moved markets. You can't deny that, and you got to be ready for it.
Well, what we were kind of talking about over the weekend, Ben, on a quick call was, we launched PeakBot in 2020, right? Bots, as we know it, of course, there have been trading bots and out there for years now, but, where it's become more popular and more of a household thing to understand that there's, trading algorithms out there for the retail trader. We only know it in a Biden administration, right? Like we said it, we're like, hey, we haven't traded through a Trump market yet, so.
Well, we've traded through it. We just haven't automated through it.
Haven't automated through it. So, and look, like any good algo provider in this space, we don't just let this happen. We need to be making adjustments. We're constantly testing, tweaking, back testing, forward testing, all of it. What else do we got coming up?
Regarding the MaxBot, and I'll just highlight as well, we've got Jay Powell speaking tomorrow at 10 a.m. So that would be grounds to turn the MaxBot off for tomorrow. I think going into tomorrow, PeakBot's Iron Condor will be off, just because we don't want Jay Powell to blow up our Condor in the morning. And talking about the MaxBot, there's been no doubt a lot of volatility in the market the past week or so. So a big change that we're making is the bot is going to pause itself at the end of every day. So if you want to trade it every day, you're gonna have to go in and unpause it. And this is just for the time being right now. We've had conversations with Max and determined like, hey, these market conditions, you're always trading at your own risk, of course, but we're forcing you to be a little bit more cognizant about yourself trading every single day and picking and choosing. Now, we're still going to follow the inactivity schedule, which Again, bot will be off tomorrow because of JPOW. But if you want to trade every single day, you're going to have to log in and trade every single day. We sent out an email on this. And that email also included a bunch of goodies in it. We're going to be giving away 3 months of Max's upcoming strategies that we'll be releasing here soon. So stay tuned with Max. He's a great trader. We're going to continue to make bots with him. So moving right along here, we actually have a number of Fed speeches tomorrow. We got in the morning, and then we've got a couple in the afternoon. Moving into Wednesday, we've got core inflation rates month over month, year over year, CPI. We've got JPOW speaking again. So for me, bots definitely up. Now that I'm looking at this calendar, I don't even think I'm going to trade trend spread this week. I might just sit this week out because I also heard that Trump is going to be imposing tariffs on countries other than Canada and Mexico starting this week. So when that news hits, who knows what's going to happen to the market. Gonna have to think hard about how much capital I want to deploy this week.
I'm with you on that. It's there's a lot of kind of medium orange signals out there, and that's not a Trump pun. There just are like a lot of things that make me a little skeptical about deploying this week.
Yeah.
Ben, we both smart exited our trend spreads on Friday. I know I'll probably take a look, but I know I'll be not financial advice. The only thing I feel good about is wheeling Walmart this week, but there's nothing new there. Although that's getting more and more expensive for me to do every week. I'll tell you that. Walmart's getting we're over the $100 mark. I don't know if it is still, but anyway.
So
cool. What else we got?
So continuing into Wednesday, we've got a 10-year note auction. That would be another event that Max would shut his strategy off for. Moving into Thursday, we've got PPI. And again, I don't know. I think I'm just going to sit out. We also have a 30-year bond auction, which again, that's another event Max will sit out for. So the 0DT bot, regardless if you want to trade it or not, is going to be off Tuesday, Wednesday, Thursday this week. I'm pretty sure, and we'll confirm with the team, but I'm pretty sure our Iron Condor strategy is going to be off today, tomorrow, Wednesday going into Thursday, and then Thursday we might get back in, and so that way we expire on Friday. But retail sales have also been, just through the studies we've done, they've been prone to busting up our condors as well. So we're gonna have to think long and hard about activation this week. There's just a lot going on. There's a lot going on right now. And again, I've said it before, and I'll say it again. I'm a believer in sometimes the best trade is no trade.
Yeah, that's a good rule to live by.
If nothing else, good reason to cut your sizes, right? Like, sometimes we kind of treat like on-off as a totally binary decision, but if you're doing more than 2 contracts, you have quite a bit of flexibility there, right? Cut your size in half, take 1 or 2 off the table. I think that's the easiest way, just from an overall trading management position, whether you've got something on or thinking about putting something on. If you're nervous, take a little bit off, cut half, sell half, buy half, whatever it might be. That's another way to, kind of manage, a situation where you're feeling a little less certain than usual.
Absolutely.
Yep.
Awesome. Well said. So fellas, if we don't have anything else for segments here, of course, I just want to make sure everybody knows, I know we're getting close to market open here. If you're interested, the reason we do this show together is because, this is man and machine here. Mark does a fantastic job of, managing portfolios with PeakBot strategies. And if you're interested in doing so, you can head on over to peakbot.com/harvested. And Mark, I say this all the time, just what a great picture you have here. What a great headshot.
This was not professionally done. It was home done in my old kitchen.
Couldn't tell.
I shouldn't tell people that.
No, you shouldn't. But if you're interested in a professionally managed portfolio, if you're a trader out there, an options trader, trying to educate yourself, but you don't have the time, you lack the strategy, you get emotional when you trade, you can let the pros handle it. Mark, FARIA, here to help you and get off the ground here while educating you on how to navigate trading options in this crazy world that we live in. So I just wanted to make sure peakbot.com/harvested. You can do this for an account as low as $10,000. Okay. Big gap we're getting filled there. So if you have
and a couple new strategies coming online, right? Like we Ben and I have been banging our heads constantly on the back. Well, he's doing the back tester, but no, I think I'm really excited about the new tools that we have. Blending some of the short side with some long side, building portfolios that are a full complemented, allocation towards, the different exposures that markets can provide. So it's a really great partnership that we have here.
Yes, incredibly excited about it. Only getting better. This is the site here. There's a lot of information, videos, articles, FAQs, a slider here on what fees would look like. Okay, so check it out. Let us know if you have questions. Wait list, but we're moving through it. Okay, so awesome, guys. I think that's it. We got less than 9 minutes till the market opens here. Of course, tread lightly out there this week, as we've seen. Not financial advice, but a lot going on in the market this week. A lot happening last week. So best of luck to everybody. We will be live here again on Friday, just shy of noon Eastern at 11:55 for a new revamped PeakBot picks. We'll find out if Mark's going to be getting involved. But me, Ben, Thomas, we're going to be taking these a bit more seriously, which I think will only improve our win rate. And we're going to be taking these trades. We're standing on them. We already share our results, and you guys see our trades week to week, but we're going to be, taking it up a notch. So we're very excited about it. Let's get out of here, fellas. Thank you so much for tuning in. Over 1,100 viewers. The most important one being Doug.
Doug, just so you know, they're all on X. I know you're hanging out on YouTube. Thank you for hanging out on YouTube.
No, I'm not making that number up. But fantastic. Doug and everybody else who tuned in today, thank you so much. And as always, we'll see you at the peak. Take care, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.